Okay, so today we're going to be going over the second largest gold producer in the world, Barrick Gold Company analysis. So who are they? Barrick Gold is the second largest gold producer in the world. For a lot of the last 10, 20 years, they've been the largest producer of gold in the world. They were just overtaken by Newmont when they merged with Goldcorp. They were founded in 1983. They're a multinational gold producer with mines primarily in the US and Africa. They got a trailing 12-month average for PE of 17.34, market cap of 42 billion. TSX ticker is ABX, and New York Stock Exchange ticker is GOLD. In the past, they seem to be more focused on growth rather than shareholder value. So this was kind of back in the last gold bull market of the 2000s. A lot of companies just were focused on increasing the metal that they had or increasing production, and not so much focused on profitability and stuff like that. So we go over to the cash flow analysis. It looks like we've got the market cap of 42 billion here. So they have basically net zero debt. So about $5.6 billion cash, $5.3 billion debt. They have copper production, which equates to about $2 billion of revenue a year, and gold production, which equates to $8.6 billion of revenue a year, with an all-in sustaining cost of $967. This is pretty good. So we look at revenue of about $10.8 billion, costs of $5.6 billion, and earnings of $5.2 billion is what I'm projecting. We're looking at a forward PE ratio of 8.23 and earnings per dollar market cap of 12 cents. So we move over to the resources. We've got 68 million ounces of reserves and 160 million ounces of measured and indicated plus reserves. This did not include inferred. And then we have 13 billion pounds of copper in reserves and $25 billion in reserves and resources. So if we look at the total value of this, we're looking at about $210 billion of metal in the ground, and that gives us our resources divided by market cap of $4.93. So we go over and comparing Barrick to the top 3 PGM producers as well as Newmont Mining. So Barrick's earnings divided by market share is 12 cents, compared to Newmont at 8 cents, compared to Sibanye-Stillwater at 51 cents, Impala at 60 cents, and Anglo Platinum somewhere around 25 cents. And then we look at reserves in the ground, our resources divided by market cap. Barrick has $4.93, so about $5. For every dollar of company you bought, for every dollar you spend in the company, you get about $5 of resources. For Newmont, that's about $8. For Sibanye, about $123, $24. For Impala, that's $72. And for Anglo American, that's $81. So you can just see that there's substantially more value in these PGM producers right now than there is in these gold producers. And I think that's just because the market narrative has more heavily favored gold, and that's where the fund managers are. But I just see that there's a tremendous opportunity for Sibanye and Impala, that they're just tremendously undervalued. And then here we times our earnings number times our resources number, and we're at 59 cents for Barrick, 64 cents for Newmont, $62 for Sibanye, $43 for Impala, and about probably $20 for Anglo American. And it's just like the platinum group metals producers are making, like, what is that, 4 to 5 times as much money than the top gold producers, and they have it's like 20 to 40 times more reserves in the ground, so just much longer lived. So I see so much value in these platinum group metals producers right now. So summary, Barrick is set to be extremely profitable gold producer. So they're still going to be making $5 billion a year. It's just that, like, Sibanye is probably going to be making $5-6 billion a year, but they're a $14 billion company, whereas Barrick's a $42 billion company. They look quite overvalued compared to the major PGM producers. They're likely to start having to buy companies to replenish their gold and copper reserves. But Mark Bristow seems like an extremely competent manager who has a strong focus on increasing shareholder value. I also believe that fund managers prefer buying Barrick and Newmont right now because of their liquidity they offer. But I think there's a lot of companies that offer a lot more value for a smaller investor at the moment. But yeah, that's everything for Barrick. Thanks for watching.